Did you know that billionaire investor Ron Barron warns against selling your Tesla stock during the crash? With a lot of investors losing faith in Tesla's stock's unsatisfying performance in the stock market, some investors, including Barron, remain bullish. Make sure to stay tuned and keep watching to find out why. People all over the globe know how gravely the world's economy has been affected by the widespread COVID-19 pandemic. This, too, caused large corporations to encounter endless dilemmas, including Tesla. While Tesla remains the leading automaker of electric vehicles, the company's stocks, along with other corporations like Apple's and Google's, have been fluctuating a lot as of late. In today's video, you will find out why Ron Barron warns against selling Tesla stock during the dip, despite its unsatisfactory performance in today's stock market. As most may know by now, Tesla is an American automotive and clean energy company based in Austin, Texas. Tesla designs and manufactures electric vehicles, battery energy storage from home to grid scale, solar panels and solar roof tiles, and related products and services. Tesla Motors was originally founded as an electric car maker by engineers Martin Eberhard and Mark Tarpenning in 2003. Elon Musk, the co-founder of PayPal, led the initial rounds of investing for Tesla before taking over as CEO. Tesla released its first electric car called the Roadster in 2008. Ronald Stephen Barron, or simply Ron Barron as he is known, is an American mutual fund manager and investor and is the founder of Barron Capital, an asset management firm focused on delivering growth equity investment solutions. Ron founded Barron Capital in 1982 and has 52 years of research experience. From 1970 to 1982, Ron worked for several brokerage firms as an institutional securities analyst. From 1966 to 1969, Ron worked at the U.S. Patent Office as a patent examiner while attending George Washington University Law School. From 1965 to 1966, Ron worked at Georgetown University as a teaching fellow in biochemistry. Ron graduated from Bucknell University with a BA in chemistry in 1965. The buy and hold investors' $10 billion flagship fund, Barron Growth, has an annual turnover of just 3%. Barron also owns one of the biggest estates in the Hamptons, which he assembled from 2001 to 2009 at a total cost of $152 million. It's worth much more now. Ron Barron's real-time net worth is $4.2 billion. Some experts say that Q2 will make Tesla investors rich. This may appear doubtful given the current performance of the company's stocks. However, the following proves that despite the roadblocks caused by the pandemic and other global issues, Tesla was able to deliver. In April of this year, Tesla reported having delivered 310,048 vehicles in Q1 of 2022, which increased 68% from last year. In the same month, Tesla reported Q1 2022 net income of $3.3 billion, a quarterly record that exceeded Wall Street estimates as revenue surged 81% year over year to $18.8 billion. Investing legend Ron Barron has been holding Tesla in his portfolio since 2014, well before the company's stock rose to new highs for the auto industry. In response to recent concerns about Musk's sudden decision to buy a stake in Twitter, Barron doubled down on his bullish take on the automaker and shared he'd be holding the stock for most of the coming decade. According to him, he plans to hold Tesla stock for at least another 8 years, noting that Musk's Twitter investment is meaningless. Billionaire investor Ron Barron, whose fund has already made $6 billion on its original Tesla investment, expects the shares will continue to skyrocket for the next 10 years. On a recent segment of CNBC's Squawk Box, Barron Capital CEO Ron Barron said that he plans to hold Tesla stock for another 8 years at least. "I think we're going to make 3, 4, 5 times our money on Tesla from here," Barron said in the said interview. Barron explained that he invested $380 million in Tesla between 2014 and 2016 at an average price of around $40 per share, so his return is about 20x so far, or about $6 billion. Barron has sold about $1 billion worth of stock in the two mutual funds that own it to diversify the portfolio. Tesla now accounts for about 12.8% of its fund's assets under management. He said, "I think for Tesla this is the very beginning of what they're doing. Recently, Barron Capital sold around $1 billion worth of Tesla shares, and Barron was quick to share this with CNBC. However, his portfolio still includes around 12.8% of total assets under management invested in Tesla, representing a whopping $6.2 billion after the automaker shares skyrocketed in the past couple of years. With Tesla's recent opening of both Gigafactory Texas and Gigafactory Berlin Brandenburg, Barron expects the automaker to produce 5 million cars per quarter a decade from now, effectively making the company as large as Toyota and Volkswagen combined. He said he expects that Tesla, which announced that it delivered 310,000 vehicles in the quarter, will be able to deliver 1 million cars a quarter in 3 years. It can be remembered that news of Elon Musk looking to drop a Tesla margin loan and is trying to secure $6 billion in preferred equity to buy Twitter came in the first quarter of this year. According to Ed Ludlow, an on-air correspondent and editor for Bloomberg Television in San Francisco and a reporter for the global business team of Bloomberg News, this move will be astonishing since it would go from a $12 billion margin loan to zero. He further stated that according to sources, $6 billion in new equity financing since he just did $7.1 billion of new equity financing recently. This cut the margin loan from $12.5 billion to $6.5 billion, which can be called a de-risking. Musk has almost always joked about being cash poor since much of his net worth is in Tesla holdings that are collateralized so he can borrow from banks against the value of the Tesla stock. If you were a Tesla stockholder, would you take Barron's advice of not selling? Let us know what you think by leaving a comment below. Although a lot of investors expressed concern about Elon Musk's stake on Twitter, billionaire investor Ron Barron remains unperturbed. In a recent interview with CNBC, Barron said that Elon Musk's roughly $3 billion stake in Twitter is meaningless, and that investors should be more excited about what he predicts are massive gains ahead for Tesla, even though shares have struggled so far this year. He even called Musk's stake in Twitter a tiny investment, adding that it is merely $3 billion for a man who is worth $300 billion. While some analysts predict Musk could take an even bigger interest in Twitter, Barron believes that the investment is instead helping his marketing, and that there's no way he's taking his eye off the ball from projects at his two companies, electric vehicle maker Tesla and rocket company SpaceX. The big picture, according to Barron, who has vested interest as one of Tesla's biggest shareholders, is the massive upside ahead for the electric vehicle maker, saying he will hold the stock for at least 8 more years and still expects to make 3, 4, or 5 times our money, as was mentioned earlier. Kevin O'Leary, a Canadian businessman, entrepreneur, author, politician, and chairman of O'Shares Investment Advisors and Beanstocks, said that the best time to invest is when everybody's going the other way. He compared this move or strategy to the lemming effect. Lemming effect in psychology refers to a phenomenon wherein crowds of people across various fields of life exhibit a certain kind of behavior for no reason other than the fact that a majority of their peers do so. Tech has been cut in half, and yet the growth rates of the companies have not slowed at all, O'Leary said. He further stated that there's no evidence that growth rates have slowed in megacap internet giants. Like Barron, ARK Invest believes that Tesla will be able to produce at least 5 million to 10 million vehicles as early as the year 2025. ARK Invest is an American investment management firm with $60 billion in assets founded by Cathie Wood, an American investor and a star stock picker. In fact, they updated Tesla's valuation model with a $4,600 price target in the best-case scenario for Tesla stock in 2026 and up to more than $20,000 by 2030. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. Additionally, like Barron, Wood said that she is not concerned at all and views Musk's Twitter stake as wanting to exercise his options, since there will be tax consequences associated with him managing his wealth. According to her, Musk is doing this to pay for the said tax bills. Even Trip Chowdhury, co-founder of Global Equities Research, said through a written note that 2022 Q2 is shaping up to be a monstrous one for Tesla. According to Inside EVs, a website that features electric vehicles, Chowdhury isn't the regular run-of-the-mill analyst who only uses models to predict numbers or simply refers to new headlines or Twitter. According to them, Chowdhury is probably the only analyst who personally checks on the Fremont factory regularly. Moreover, David Lee, a known YouTube content creator whose channel tackles all there is to know in investing, remains bullish on Tesla stocks and constantly says that he is in this venture for the long haul. He added that he firmly believes that Tesla will see spectacular growth by 2030. At the end of the day, the decision remains to be yours, and these analysts and investors are sharing their thoughts to help others come up with their own conclusion based on their presented facts. Visit our channel and watch our other videos for more Tesla content.